Okay, welcome everybody to this evening's AUDJPY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review, so let's get into that. Before we do, if you could all read through the disclaimer. And for those in the webinar, any questions can go to the chat box, the Q&A box. If you're on our YouTube live stream, I cannot see the chat, so you can watch, but I can't see any chat if you're chatting to me on YouTube, but you're more than welcome to join us in the webinar. I've given you the link there. So everybody, please take the time to read through the disclaimer. All right, let's move along. Now, for those that maybe don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at AUDJPY Securities. And I'm a full-time Forex trader. Been trading since 2005 in the Forex market, so almost 20 years. Mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. And if you want to connect me through the week at our website, acy.com, go to the market news tab, or at our YouTube channel, which is at AUDJPY Securities Australia. Or if you want to connect with me personally, my Linktree page is there. You can connect with me there. And if you want to get access to the charts I'm using for MT4, just contact Nathan.bray. His email's on the screen. He'll set you up. And for those in the webinar, I'll put his details in the chat. There we go. All right, so let's first up tonight, get into the news events for the next couple of days, rest of the week. So we have some big items coming out. We have the US inflation data coming out today, tomorrow. So 10:30 p.m. my time, Queensland time. For the US, we have core CPI month on month, CPI month on month, CPI year on year, and also unemployment claims coming out at the same time. So if these don't come out as forecast, higher or lower, then we're going to see, I'm sure, some extreme volatility through that period. Into tomorrow, we have for the UK pound, 4 p.m. GDP month on month. Then 10:30 p.m. Canada employment change and employment rate. And then the next inflation data from the US is the core PPI and PPI data month on month at 10:30 p.m. as well. So inflation data coming out tonight and tomorrow night is going to be extremely volatile. So probably best to wait for each item to pass before thinking about what you want to do, especially if you want to enter just an intraday trade today. Well, let's bear all that in mind. All right, so let's get into the charts. And really what we're seeing, this is the monthly chart of the dollar index. US dollars are getting stronger. So if the inflation data comes out a little bit stronger than maybe anticipated, that's just going to add fuel to the fire of price moving up from this support area at 100.30. Very strong month already, and we're only in the first 10 days of the month. I'm anticipating that maybe we are moving all the way back up, maybe to the top of the range up here at these highs. So if that's the case, we've got plenty of room for a move up, which means pairs to US dollar probably have plenty of room to move down. Of course, continued move up is going to be dependent on data from the US, primarily I think inflation data. Job figures data came out last week, very good, which certainly added to the upward momentum there of the dollar. Okay. All right. It's worth just looking at the day chart of that. You can see here, we've actually put in a minor higher bottom here now. So we've had a 1 or 2 day pause to hold there. And then we're continuing up. So there's nothing stopping that going up at the moment. All right. S&P 500 at the moment it's been rather consolidatory here. It's been above what was the all-time high, the July high that was. Slightly sideways. It has gone to a fresh high yesterday. We may see a movement back within the range depending on the data release today. But down here is clear support at the moment. So I will be looking for In an ideal world, if I want to trade the indices, or I should say index, the S&P 500 index, is a dip. So it could come back down to support, or at least look for the normal kind of Fibonacci retracement. All right. Look for a 62.79% pullback. Look to buy a dip as and when that can present. Because do you want to buy at the all-time highest price that you can get the S&P 500 at? Probably not. So always looking to buy a dip. So let the market offer you that dip, however it may look over the next day or two. Unless that is, if inflation data, there's always a question about the inflation data at the moment, is we kind of maybe upticked a little bit last time. So if we start upticking, there's always that question in the back of the mind, are we starting to put in a bottom in terms of the decline of inflation? And are we going to further move back up? Because if that's the case, that would not assist the indices moving up. All right, so it's well worth starting to notice, is inflation starting to uptick or not? If it is, that doesn't bode well for indices, because that would mean higher interest rates, even though the Fed at the moment is saying we might be getting a cut. Further cuts this year and more cuts next year. But if inflation doesn't keep moving downward, things could change. All right, let's get into the euro dollar now. Still right at the bottom of the move here at the moment on the euro dollar. Just go back to the day chart. So we've put in a double top up here. I've updated my lines, but there's a double top up here. I might as well put the final top in, which is at 112.01. And if we just use that double top up there as a kind of guide to where price may be going medium term, then the height of the pattern projected below comes down at 108.01. So I would suggest, and when we were up here, I said we had an imbalance here on the day chart. So there is an imbalance here. Is that imbalance probably needs to get filled? So that is a primary target to where price could be heading towards over the next, well, we're at 109.29. We're only 129 pips away from that 200 level. And it is worth noting as well that the range on the euro dollar to US dollar has been rather small. All right. So whilst this looks kind of large, it isn't that large at all. The height of the pattern here is only 200 pips. All right. Things got really exciting on the euro dollar. We could be doing 100 pips a day. And we could easily be down here by the end of this week if the data comes out very US dollar positive. All right. So certainly by the end of the month, we can be more than down into this zone here with this trend that's unfolding to the downside. We broke this low here, which is a weekly low, so the weekly trend's turned down. So at the moment, we're at the bottom of the move, which makes life difficult. If you haven't already sold, life's difficult. But at the moment, I think any uptick at the moment, two levels to watch. I might just go to the day chart to talk about them. This high here, which is a weekly high, we've moved below. So that's at 109.48. We haven't traded up to that level today, so we could certainly retest that area today, and that could hold to continue down. Any large volatility to the upside, I would look at the 110 level, which is only 70 pips away. So we can easily come back up to 110 today for a rally, or we might get a minor bounce back up to 109.48. If the data is very US dollar positive, this will just drop and you won't be able to get short. So in an ideal world, looking for an opportunity to get short on a rally at the moment in line with that trend. And if we get a clear drop today, over the next couple of days, look for a move back up to 109.48 as a rally point to trade down, okay? There's no real point going to a lower level at the moment, because when the data gets released this evening, you want to know where the higher time frame levels are to trade with this downtrend down from. All right, 50-minute level that I might give you right now will mean nothing at 10:30 tonight. All right, so we're seeing a continued downtrend on the euro dollar. Look to sell a rally in some form. I'm giving you two levels to watch there. Euro yen. Just want to go to the weekly chart. We're coming up here. Whilst we have a higher bottom here to a higher top area, we're coming into an area of resistance. A little bit short of at the moment a monthly top over here. Pretty sure it's a monthly top. Yep, this monthly top here. That could be a real headache as price moves back up at 164.29. Worth noting that level. So trend is up on the weekly, but we're just at lots of daily chart resistance levels here when we get to the daily chart. You can see them all here. And today we've been up to the 163.48 level. And you can see today we're selling down. Now we may not continue down as the day presents, but at the moment you can see there are 1, 2, 3. This is the fourth candle failing at that level. So that is telling you that, okay, unless something positive for the euro yen comes out, we are probably moving back down the range. So it's worth, the Forex structure is still up. So if you're very bullish, look for a dip. We're coming into the 62 level. So watch the 62.79% level. I'm not that bullish at the moment because of that's the fourth failure. How many times is it going to fail there before it starts to reverse its trend? So I'm on the sidelines watching to see if we are actually failing up here. So I'd be happy to just be on the sidelines waiting to see if price can change the 4-hour trend to down, break a swing point low, and then rally back up and create like a 79% retracement or something. All right. And then look to get for a sell to move down. Now, of course, over the next couple of days, we may blow through this area, but at the moment, that's being resistance. So I'm not going to buy into resistance. I have the option of doing nothing or just being patient and waiting to see if a sell pattern of some sort can come around the corner. All right. All right, euro pound on the day chart. This is a weekly low here. And this is a weekly low. So we failed at this one during this week over the last 2 trading days. And now we've moved below this one. So that's the major reference point to see if we can run it back to that level. That's the sell level at the moment. So what I want to look at is just on the 4-hour chart, the range that we're putting into the downside. And lo and behold, the 79% level overlaps with that weekly resistance level. So that would be the ideal level to look at if we get a rally from where price is sitting right now, is to look for a rally back up to 83, 82 and look for that as a level to trade down from. It's already proved itself that it wants to move below. It moved below, did trade fractionally back above, but there's 1, 2, 3, 4 candles there that held or rejected that area to move down. So look for the next rally back up, down. Okay. So that level's at 83, 82 if it gives you the friendly rally. All right, getting the pound dollar. Pound dollar, this red line on my 50-minute chart, same line on my 4-hour chart. It's just been hidden by the price line at the moment, but that's last week's low. So at the moment, we're not really we have traded below it, but we're not really wanting to commit below last week's low at the moment. It's a little bit sideways here at the moment as we are on the lower time frames. So it's worth noting on the weekly that we've come down to this weekly top, 130.44, or very close to. And the weekly trend is remaining up because that's the higher bottom, higher top. Euro dollar's turned down. Could be a question that this will just catch up. We'll have to wait and see. So there is the question, I said this on Tuesday, that this could remain in a long-term trend. This is the weekly range. And if we start to close back above the 79% level, which we're not doing at the moment. See all the closes over the last 3 days have been below. Well, yesterday we closed below, above, below. So we've been chopping around it, but yesterday we closed below. So if we get another close above, then maybe the 79% level is going to be the area where price could get support to move back up. So that's the bullish scenario. But we need to start to see this price action getting above 79% level at 130.93. So being able to exist back above 131, which price isn't doing today. Price hasn't been up to 131 today. Did just get above it yesterday, but so it's really a little bit consolidatory as we get to a lower time frame. And the question is going to be, are we going to come down? This is the weekly low, last high weekly low formed. Are we targeting 130? Are we going to see a break of 130? Or are we going to see price maybe test 130 and hold, move back up? So these are the scenarios at the moment. We're going to either break 130, or we could come down, test it and hold, and then we might want to have a relief rally. I got short up here at 134, so I'm just hoping this is just going to break down and we don't get any strong rally. But over the next couple of days, 131.42 that's a weekly high. Go back to the weekly chart. This is that high over here. So that's a significant high that we've moved back below 131.42. We can definitely today be back up at 131.42 on a rally. All right. So as this has been moving down in the downtrend on the daily, I would look for a rally if it can present. And the obvious level is 131.42. Depending on if we're going to get a small rally or not, rallying back up to the 130-100 level would be good too. Bit choppy in here at the moment. So 131.42 if we get a very high rally. Or if we don't, move to the 15-minute chart. Up to 131 would be great. I just want to move back to 4-hour, draw a fib across this little range here. Back to 115. So the 79% level of what was Wednesday's high down to yesterday's low. 79% level overlaps at the 131 level. So that would be a great level to watch. To the left, you have all these highs being formed intraday as well. So that would be a great level to watch. That with the lower level. High level would be up at where is it? 131.42 up there. All right, so you can see at the moment, that dashed line is last week's low. We're not able to commit below there at the moment. We keep dropping below, bobbing back up. And probably not too much will happen in terms of price action at the moment until we get to the US news, okay? Of course, if you're very bullish pound dollar, banks coming in here today, just underneath last week's low. Last week's low is at 30.69. Support's coming in at 30.69 down to 30.67. All right, so if you wanted to buy and hold through the news, well, this is the zone to be looking to buy in at the moment. If you think we're going to go very bullish. But don't forget with the most pairs to the US dollar at the moment on the day charts are down. So you would be going against the most immediate trend. Pound yen, not too dissimilar to what we're seeing on the euro yen. It's struggling up here. Big rejection there. And then there's some daily candle highs all coming in here. All right, just a little bit below this area of, well, 195.88. It's not these highs, it's from back in time. Go to your monthly chart. It's this high here. So the market, if you're not going to your monthly chart, you're not going to understand there's a major monthly high there that we moved above. And now we're just sitting below. All right, pretty much last month's high came up to there. And then there's countless days now where we're just holding underneath. we could be coming up for a retest, from a big monthly perspective. Whilst the trend is up at the moment from a higher bottom to a top, we could be coming up to retest that high over there or close to initiate price pattern like so. So if we keep failing up here, it's worth noting why we're failing there. So the weekly trend, it is higher bottom, higher top. To the daily, all right, so at monthly level, touched it last month. This month, we can't quite get there. To the 4 hour trend, like we're saying, the euro yen is still up. So difficulty at the moment is we're very high up here at resistance. You could look to buy on a setup to 62.79% zone to see if we then move back up and break above these highs. But keeps failing up here, so I'm a little bit reluctant. Like I was saying on the euro yen at the moment, I'd be more inclined to see if we're holding up here and we can see a 4 hour structure change. Break a low, rally to move back down the range. All right. Not able to this month come up to test or actually trade at last month's high. So up here is very high. We're at the very high area of last month's range. All right. Highest price where people wanted to pay last month. So I would just be waiting to see if we can get a turn down, maybe. All right, Aussie yen. Now it's already starting to sell off from just want to check my monthly levels. We're short of the monthly highs over here at the moment. All right, so these are all daily areas up here that have been forming over the last two or so weeks. Now, we can quite clearly see here on the day chart, trend is up, but as it comes up here, it's not wanting to move above this high here. So, like I've been saying on the other yen pairs where they're seemingly a little bit at resistance, and you can wait to see what happens on this. If the candle that we'll see now kind of finishes as it is now, and we have a day down tomorrow, that's starting to tell you putting a lower top in. So we can wait to see whether we are getting a turnaround. But depending on your side of the market, support is at this area, 99.85. I think we've been very close to the 100 today. And resistance is at 171. So it's about a 70 to 80 pip. What is it, 85 pip range between support and resistance at the moment here. 4 hour chart is remaining up. So again, you have the option looking at 62.79% dip to trade up. Or you could be maybe looking for, are we seeing a turnaround up here? I will just wait for that to qualify itself again, allow price to break a low, rally, trade down. All right, so I do have a question in mind at the moment. Are these yen pairs, except for the dollar yen, are these yen pairs maybe topping out? We'll have to wait and see over the next couple of days. But we've never seen euro yen, pound yen, and Aussie yen all holding at their resistance levels at the top at the moment. All right, Aussie dollar. Trend is down on the daily. Trend is up on the weekly. Here's the weekly. High bottom, high top. Doesn't necessarily mean that the week is going to continue because of where it's failed at these highs up at the top here, top of the range. So I don't really think you can go trade too strongly with the idea that that weekly trend is going to hold. It may well break because of a fair at the top of the range, and its cousin, the New Zealand dollar, has definitely failed at the top of its range and changed its weekly trend. So maybe this just needs to catch up. But the most immediate trend is down on the daily. It is today. You can see this area here. 67.37 is being resistance. Moved up, back up to that level today. So we rejected 2 days ago. Yesterday closed below, and today, whilst we traded above, we've rejected. And on 4-hour chart, we've had like a 62% retracement using that area as resistance. So the 4-hour structure is remaining down. So we may come back up to 67.37 in the day. Could come up to 67.49 on the volatility news later, and there's a little high there to the left. So we could, in the middle of this move, see a little bit of a head and shoulder pattern up here. That's worth watching, that level 67.49 later in the day for a rally. But daily and 4-hour structure here is all down. I would, unless we get a change of the structure, we're probably coming down targeting 66.22 at the moment, which is a good 100 pips away. So room to, are we coming down to test last month's low down here at the moment? There is, on the buy side perspective, last month's low up to high. Your fib. We haven't quite been down to 79% level, but it is well worth watching over the next week. If we come down to the 79% level, 66.90, so 66.90 down to 67, well, not far away from that level really. We're at 67.22 now. Is if that starts to hold, then the low of the month could well come in at the 79% retracement level of last month's range. So that's well worth watching that level as we go through these news events over the next couple of days. And just put things in perspective there on the 15, you'll be able to see there we came up to the 62 level. And of course, the 50-minute structure has been starting to move down. So we could definitely revisit that level later in the day. That area, 67.37 to 67.40, or the 79% level up here, 67.49, which overlaps with the 4-hour area to the left over here. All right, New Zealand yen. Don't really like it at the moment. It's very range bound, but it has failed up at the top at resistance here on the day chart, much more and ahead of the other yen pairs. New Zealand dollar has been trending down with its interest rate cut yesterday, but it's not able to come down and test support. It's kind of, if we're in a true range here, I don't like trading in the range. So, if I think we're in a range here to here, and this may these yen pairs could stay range bound, because if the dollar yen's moving up and the pairs to the US dollar moving down at equal measure, at equal rates, then the yen crosses don't have anywhere to go, do they? Except be kind of range bound. All right. So we could just remain range bound here. So resistance is at 91.65, supports at 89.59, and those would be the areas that I would look on a lower time frame to trade up or down from. At the moment, has been kind of in the middle of the ranges here. So we've been trading up to the middle and a little bit back below. I don't like being in the middle when we're in a range. So I like to trade the outskirts. So those are the outskirts to watch if you want to trade the New Zealand yen. All right, New Zealand dollar. Traded down nicely after the interest rate cut yesterday. We've moved back up half the way within the range of yesterday at the moment. So on the weekly, as I've been discussing, fair at the top up here. Are we moving down? We've changed the weekly trend to down, moving below 61.06. So that remains the level at the moment to look for a rally back to, for an opportunity to sell if you're not already short. I got short up here at 63.60, not to tap my own, I won't say skill. All I was looking at was where major resistance was, and I decided I wanted to trade at the area in the idea that maybe the range would hold, and the range wanted to hold. So then, of course, I'm on the right side of the ledger. And I'm looking for this to move down to the bottom at 58.49. So if you're not short yet, we have traded below 61.06. Big move down yesterday. We could come back up to 61.06 today. So that's the key area to watch now. See the day before, that level traded down and wanted to be positive. Yesterday, then we sliced it through like butter. So now you expect price to come back up. If it wants to be friendly, that is the sell level. So then look to target the next area of support down at 59.84. You can see this area here, which when we're above here could be support. See, we came down this day. The next day, it just came back up to retag the area to be resistance and then traded down. So this could come up to retag the area today, 61.06, to trade down. That is the level to watch for if you want to sell. And with the fail at the top, I don't really think you want to be really looking to the buy side because it's a clear downtrend there at the moment. So why try and find it? I mean, it could get a little bit above 61.06 depending on volatility later in the day. So it is worth then drawing a fib from the lower top to bottom at the moment. 62 level pretty much overlaps with 61.06. And you can watch 61.19, 79% level. So that zone there would be the sell area to watch if we can get back up there today on a rally. And that is last month's low as well. So clear break of last month's low on the interest rate decision. Expect that to be resistance on a retest. All right, dollar Canadian. It's moving up within the monthly trend. Monthly trend is up. High bottom, top, pullback. That was about a 62% pullback. So I'm anticipating this could. Now this has been, I said this last night in my trend webinar. We have trends, we have consolidation. This has been consolidating for quite a long time here in the monthly chart. Trend bias, though, within that consolidation is up. So if we take out those highs, we could be heading up to these highs. All right. So, well, we could just stay within the range, but we are putting in now because the range was, average those highs, average these lows. There was the range, but now we've put in a higher bottom within the range, which is kind of showing that maybe we're heading for a breakout. All right, now, so if you can buy a dip, we could see a breakout of those highs at the top, being consolidating for a long period. We had a period of consolidation back here. All right, big move up. So we could break out here. All right, so monthly trend is up, and to prove the point, it's about a 62% retracement. There it is. Very high up on the weekly chart at the moment in terms of this week's move. So, you know, if you wanted to get long, it'd be nice to buy a dip. And we've moved above this weekly top here at 136.47. So a dip back to there, if it will allow it, would be ideal for the buyers at 136.47. Whether or not the market's going to offer you a friendly dip, sorry, daily chart here, you can see countless days up. That's the area I'm just discussing. So if we could pull back to there, that would be great, but it doesn't look like it wants to pull back at the moment, which makes life difficult for our chart. Last minor pullback was here. So if we only have minor pullbacks, you want to monitor the range currently, which is there. to the 15. That's the 4-hour range at the moment. And if the market will dip, very strong at the moment, what I've noticed is, just looking back at the days, yesterday and the day before, there's a central pivot point. The day before, central pivot point there. Price action has not wanted to go below the central pivot point last 2 days, which means that intraday price action is very strong. And today, we've been nowhere near the central pivot point. So if we were to get down to the central pivot point today on volatility when the US news comes out, that would be a great area to watch for support. Comes in at a low point there too. However, I might not be able to get down there. Watch the 62.79% area down at the 137 level, 79% there. That would be a great area to watch for a dip if the market's going to offer you the dip. All right. Yesterday was, whilst it went up all day, you can see it was giving you intraday pullbacks. Today, at the moment, it's not offering anything, but it may when the news comes out later in the day. All right. So I always look to buy a dip. If you want to buy here, look to buy a dip. Dollar franc. Now, I just want to go to the weekly chart. It's turned to up after consolidating, turned to up, breaking above that high. It has actually this week come back down to test that high and move up. Just trading up close to, at the moment, a daily area of resistance. And it has moved up, put in a higher bottom here. And you want to look to buy a dip. Could get a very friendly dip down to 85.49. That would be the most perfect level to look for a retracement to. So on the 4-hour, we've actually, on the 4-hour, once we move back above 85.49, we had this dip down here. So may not be able to get down to that level. That's last month's high, but last month's high, 85.49 would be ideal as support if it came back down to retest once more. There's the most immediate 4-hour range. So I would monitor the 62.79% area of that range for a dip if the market can offer you a dip. So when we're seeing strong trends on some of these pairs at the moment, just have to be patient. I mean, it did offer a dip here. You drew a fib in across that range and monitored, it came into the 62.79% area and then moved back up. So we had to wait. So patience is the game. We'll offer you a dip there to continue that move up. All right, dollar yen. It's just trading into, at the moment, let's go to the weekly chart, into a weekly high here. All right. I was doing some work on this today. There's a major monthly high area, 2 monthly highs up here. Go to the monthly high. This is 20, that's a 22 high, that's a 23 high. And we have actually broken this low point here. So potentially the dollar yen could be coming up for a rally from a lower bottom just, and want to put in some form of lower top over here somewhere. All right. If we got up to 151.94, this high here, I would be watching that like a hawk for reversal, but we are 300 pips away from there at the moment. But it's worth planning ahead. Where would be the most perfect area to look for a short on the dollar yen? Up there, okay? Now at the moment, it's doing a little bit like the other yen pairs. It is just wanting to hold at the moment at this weekly high here. That daily high there. And you know what? We could form a double top here. If we trade down today, finish negative from that level today, then is then well worth watching on the 4-hour chart for structure to break. So if we are failing here, want to see a breaker structure, rally, trade down. Okay. Could later in the day when the news comes out. What happens if price today jumps back up to this level and then starts to hold? Well, drop down to a lower time frame and look short from that level down. It's already told you on the last 2 4-hour candles it doesn't like it there. So if it came back up there again today and held, then you could look for a tight entry on a lower time frame. At that, we traded up to a weekly high point. If we're not wanting to move above there at the moment, well, if you can get a tight entry and get the risk out, maybe we're going to reverse all the way back down the range. We'll have to wait and see. All right. Let's have a look at gold to finish off. Gold in itself is remaining higher time frames very strong. This is how I marked it out on Tuesday. I said price was where my mouse was, I think. And I said, okay, draw a fib down to the low, watch for a 79% retracement, 627% retracement, and it did on the next candle. And then it's moved down. Bit sideways here at the moment, but notably now it is starting to be here on the 4-hour chart. That is last week's low, and last week's low is now holding as resistance on a rally on the 4-hour chart here. All right, this may come back up into that area to one small move down. So that's really the reference point at the moment for resistance. Here's last week's low. So it's worth us understanding on the weekly chart here, we're in an uptrend, cleared uptrends, monthly trends up, weekly trends up. We're just having a corrective phase back down on the daily, which means we're having, 2 weeks down here at the moment on the weekly chart, 2 weeks of correction against the overall uptrend. Perfect here, as I said on Tuesday, for this dip to complete would be down at weekly support at 25.31, close to 79% retracement. So on the daily, we're seeing a little bit of a downtrend. If I wanted to short this, I would draw a fib from there to there and look for 62% to 79% rally. Mapping that out on the 4-hour. Look to this area. 26.45 to 26.56 for a rally short. So we're looking for a rally to get short from movement back down towards weekly support if we're having a longer term corrective phase at the moment. Might not be able to get down there. Gold, long term at the moment, it's in a very strong trend, and the inflation data tonight and tomorrow from the US could well, the downtrend that we're seeing at the moment could well come to an end after the data release today or tomorrow. All right, but at the moment, the day chart trend is down, having a few weeks down against that long-term weekly uptrend. So level to watch up there, 26.45 to 26.56, okay? So for those coming in late, we have very important data coming out this evening from the US, the CPI, core CPI, CPI month to month, and year on year. If it comes in on print, maybe the market won't be too volatile, but if it upticks, then I'm sure we'll be volatile. To the extent of seeing further US dollar strength, all right? So be very aware of CPI data tonight, PPI data coming out tomorrow night. Fed's making its decision, I'm sure, based on the data coming out, whether or not they're going to further cut in November, December, like they were kind of alluding to at the last interest rate cut. If that inflation data grows, then maybe they may have to not further cut until they are sure that CPI is going to hold within their range of 2 to 3%. So theoretically, we're in the range of 2 to 3% here. But of course, they don't want to see this moving up close to 3% again, do they? All right, so keep your eyes out on the data coming out. I think I will wind things up there unless there's any questions. So definitely worth noting that, euro dollar is probably the heaviest traded currency pair. And we're definitely seeing, if I go to my weekly chart here, very strong sentiment last week from a double top. And we're moving further down this week is in any event of the news at the moment, I think it's look to sell the rally at the moment. All right. As I don't know if this is going to come to fruition, but of this range here that we've been in for most of this year, or all of this year, we've been in this range. Let me get rid of that fib just there. We've traded above the 79% level of this euro dollar, which is here, of this range. And there is the question with this double top forming that this 79% could be the focal point for us to move down like so, long term. So we're at 109 at the moment. That level down there is at 102.24. So there's plenty of room if that is unfolding. You just want to be looking maybe for the opportunity to sell a rally within this weekly downtrend that's started to form from a weekly double top. This could well be the high of the year. And, are we trading down for the remainder of this year? We'll have to wait and see. And are we going to continue down with that move into next year? All right, I'll leave you with that thought. Thanks, everybody. If you want to join me next week, my webinars next week will be at 8 p.m. Sydney time. There's the webinar link at the top. So I'll be next on board on the 15th for more analysis. So that's next Tuesday. Going to be going through trend lines and identifying change in trend on Wednesday, and more analysis from me then on Thursday. So if you want to join me, head over to the link, register your interest, and look forward to seeing you next time. Okay, thanks everybody. Have a great rest of the week, and just be aware, just be careful around those US news items coming out as we head towards the weekend. Thanks.